Hello everyone, my name is Tamiris.
I'm Fabiana.
My name is Sana.
I'm Danisha.
And today we will talk about film industry risk analysis. During the course of this presentation, we will talk about the agency problems, business risk, financial risk, and talk about the value evaluation of Amazon. To begin with, the presentation about risk associated with Amazon. It's a global leader operating on the intersection of diversified business that includes retail, cloud computing, logistics, and digital service such as e-commerce. Cloud computing service AWS and the first-party retail and marketplace system generate the biggest portion of operational profit, while there are some streams of additional income like investment in AI, advertisement, and subscription, which altogether form a very complex and unique business model. According to the Amazon annual report, the total revenue grew from 575 billion to 638 billion in 2024, which makes it one of the top Nasdaq-listed companies. Given that scale and complexity of Amazon, it's essential to examine business and financial risks to have a comprehensive view of how they sustain growth and assess competitiveness with different industries in which they operate. This is why we chose Amazon for this presentation. The following presentation will analyze systematic and systematic risk, beta, financial ratios, and give you a valuable insights into Amazon's evolving risk environment. So this is what I was talking about, that Amazon works in the intersection of different industries. There's retail, web service, and other services, which altogether forms a unique business model.
Agency problem. Agency problem arises when there is a disagreement between managers and other stakeholders. This was the problem faced by Amazon. In 2023, 32% shareholders voted against executive pay, and opposition raised to 38% among independent shareholders. Board members were not satisfied during the re-election. The Alexa division lost $10 billion, yet executives were rewarded. Injury rates were 6.6 per 100 workers in Amazon warehouses. This led to lawsuits and fines. Amazon had to pay $29,000 as fines. These are the future agency problems that Amazon will likely to face. AI-driven workforce changes. There were 14,000 layoffs in 2025 due to AI. More layoffs can happen in the future. Equity-based and speculative projects can misalign management priorities. Operational risk. If work conditions do not improve in Amazon warehouses, this can lead to future lawsuits and fines.
So now let's talk about the business risk. According to McKinsey, business risk is the uncertainty that companies face in generating enough income to cover its costs, which may lead to lower than expected profits. There are systematic and unsystematic risks. Systematic risks come from the broad economic forces that impact the whole market and cannot be eliminated through diversification. So it's market-wide or economy-wide risks, while unsystematic risks come from these firm-specific issues that can affect only particular companies in the same industry. Let's talk about the systematic risk. Beta for Amazon stock for 3 years is 1.38. We will talk about the beta in details a bit later. This means 39% higher price volatility compared to a broader market. Amazon beta has historically averaged between 1.3 and 1.5, and it's higher than 1, which means there is a high systematic risk and high exposure to macroeconomic shocks. Average beta for tech firms is usually 1.3, hence Amazon has slightly higher systematic risk compared to its competitors like Apple, Microsoft, or Alphabet. Systematic risks have macroeconomic or geopolitical origins. Changes in interest rate, inflationary pressure, recession, and shifts in consumer consumption heavily influence the Amazon profits. A recession means that consumers are less willing to purchase Amazon goods and services, and investors are less willing to invest. Amazon cannot control this macroeconomic factors, as well as the labor cost, exchange rate, and supply chain. This altogether creates systematic risks and make Amazon stock prices more volatile. Talking about the unsystematic risk, Amazon is exposed to moderate to high unsystematic risks that are heavily related to complex operational and competitive pressure. Strong competition threatens Amazon market shares and margins. According to Nasdaq, Amazon's competitors such as Microsoft Azure and Google Cloud use AI-driven offerings which may negatively impact Amazon's dominance in cloud computing. But as mentioned earlier, this brings a major profit. So Amazon needs to invest more or lower prices to remain in the lead. Threats also come from the retail sector, from foreign online marketplaces that offer much lower prices such as Alibaba, or from traditional retail stores that are also moving online like Walmart. Unsystematic risks also include regulatory and legal issues. Amazon is under heavy scrutiny and regulatory pressure, facing Federal Trade Commission lawsuits, EU lawsuits, because of abuse of market power, overcharging, data security, and cybersecurity. So there's a lot of unsystematic risks. However, diversification helps to mitigate them to a lower degree.
So the financial risks, there are two types of financial risks, external risks and internal risks. Right now I'm going to talk about the external risks, which is beta and standard deviation. According to the Amazon annual report, the beta is 1.39, which is greater than 1, indicate that Amazon stock is more sensitive to market movement than the broader market, in this case of Nasdaq. For example, if the market increased by 5%, a stock is with beta equal 1.9 is expected to increase by 6.95%. If the market falls by 5%, Amazon may fall by 6.95% or more, which means that the investor have higher potential gain. According to the investor, investor what they need from the annual report. So the Amazon stock is likely to outperform the market during a positive market movement due to its beta is above than 1. So similarly, Amazon stock may decline more sharply than the market during downturn, increase downside risk. On the other side of this calculation, the standard deviation of the Amazon, which is monthly return, is equal to 0.10152, which is drastically greater than the Nasdaq market, which is 0.06118. The higher standard deviation indicate that the Amazon future returns are less predictable and subject to be wider fluctuation than the market stock. Amazon has a significantly higher return than the other market, which is greater volatility indicates a higher financial risk. A reason of Amazon have higher market risk, the technology sector is fundamentally more volatile, as companies within this field of face rapid innovation cycle and intense competition, all of which is led to frequent movement in share price. Amazon rely largely on customer demand and global e-commerce activity, which means that financial performance is directly linked to changing consumer behavior, economics condition, and online spending trend. Fast-paced technical innovation cause Amazon earning to vary. A big expenditure in new services, infrastructure, and digital technology can result in uneven short-term profitability. Due to its international activity, Amazon is subjected to be a number of risks during changing regulation, currency fluctuation, geopolitical conflict, and inflationary pressure in various regions. So the impact of these factors is mean that it causes our stock price to react strongly to the market change, making Amazon more sensitive to economics uncertainty than the average company.
Amazon's revenue has grown consistently from 2022 to 2024, rising to $638 billion last year. This shows strong ongoing demand for both its online retail and cloud services. After a market cap decline in 2022 due to economic pressures, Amazon's rebounded sharply. Its value climbed to £1.23 trillion in 2023 and nearly $1.9 trillion in 2024, reflecting renewed investor confidence. Assets rose from $463 billion in 2022 to $625 billion in 2024, while liabilities grew much more slowly, from $316.63 billion in 2022 to $338.92 billion in 2024. Amazon's book value increased sharply from $146 billion in 2022 to $286 billion in 2024. This shows strong performance, improved profitability, and effective debt management, with Amazon becoming financially stronger each year. Amazon's price-earnings ratio shifted from -313 in 2022, reflecting major losses, to 51.3 in 2023 as profitability recovered. In 2024, it dropped to 38.8, showing stabilized growth and some investor caution. Overall, the shifts highlight changing expectations toward Amazon's future performance. Some risks that Amazon can face are cybersecurity threats, which Amazon manages through audits and employee training. There are legal and regulatory risks due to complex global rules affecting its operations. Amazon also faces intense competition across retail from innovation, pricing, and new business models. Finally, foreign exchange fluctuation can impact its international earnings. Amazon's ratios from 2022 to 2024 show clear improvements. Profitability is much stronger, with a return on capital employed rising from 3.98% to 15.40%, and both gross and operating margins increasing, showing better cost control and efficiency. Liquidity has also improved as both the current and quick ratios increased, although the quick ratio is still below 1. The cash conversion cycle is negative, receivables and inventory days have fallen and payable days have increased, supporting cash flow. Risk levels have declined, with gearing down from 110% to 56% and interest cover rising sharply, making Amazon financially safer. This chart compares Amazon's monthly returns to the Nasdaq Composite from 2022 to 2024. Amazon's returns, shown in blue, stay relatively steady, while the Nasdaq, shown in orange, displays much larger spikes and drops. That's because Nasdaq includes thousands of companies, creating more volatility. Lastly, the cost of equity has risen slightly, meaning investors now expect higher returns. Walmart is a global retailer that operates in different sectors. Amazon shows sharper spikes compared to Walmart. Nasdaq is again the most volatile return compared to the others. Walmart stays the most stable, with smaller fluctuations throughout the period.
To conclude, Amazon revenue increased, the book value also increased. This indicates financial growth. Gearing ratio and interest cover improved. This shows stronger financial health. The stock is volatile. To limit this volatility, we need to diversify revenue and apply basic hedging. Agency problems and operational and regulatory risks, such as cybersecurity threats, are present, and this requires careful management. This is our list of references, and thank you for listening.